traders, Gary Wagner here, just about 10:30 in Honolulu, 4:30 in New York. It is Monday, the 24th day of August, 2015, and this is the daily report for gold and silver. Precious metals down across the board, but of course the really big story is a continuation of the sell-off in the U.S. equities markets following dramatically lower prices in China as well as Europe across the board. When you look at the S&P, for example, that's off about 5%, a little bit over at 1868.75. And I draw your attention to this daily chart that I've just put up so that you can kind of put into perspective the kind of moves we've seen over the last 3 trading days. Of course, Thursday, Friday, and today, you can see the lows that it hit were around 1840, and they actually go and match the lows of the sell-off that we had back in September of 2014. This was the last really mighty retracement that we had. We have had very, very shallow retracements up until we hit the top. We definitely hit a glass ceiling at 2120, but this kind of a move can only be comparable to the kind of move that we saw back in 2008, 2009. So to really put it into perspective, I've gone ahead and compressed this chart to a great degree so we could include the data points from 2008. We had our top at about 1600, and from 1600 we fell all the way down just to about 700 in the S&P. Tremendous 1,000 point drop. That's the kind of move we saw. But when we saw that precarious drop back in 2008 through to 2009, the economic scenario was quite different. We were in the beginnings of a deep recession. We had a housing bubble. We had a financial crisis going on with our banking system. And it was truly a USA based scenario. Now, in this case, we don't have that same scenario. In this case, we're reacting to something that's going on overseas. And in fact, I still believe that our economic data is really fairly strong. And because of that, I don't see this particular move to the downside as an extremely protracted move. Now, of course, that is very contingent upon what we see happen in China as well as Europe. Now, most importantly, the one thing that we really need to look at when we look at the last sell-off in the equities markets is to kind of look at how gold acted during that point. That's one of the reasons that I trailed the stop very, very tight last night under the assumption that we would have another wild day in the equities markets, and that could get the proverbial baby thrown out with the bathwater. Because last time we had a meltdown in the equities markets, and what I've done simply is put up a gold chart. This is a weekly gold chart. We're comparing it to our weekly Standard & Poor's, this being really the beginning of 2008. Here we've got the beginning of 2009. And so when we look at it in that way, here's what we see. As the equities market sold off, we had a lot of margin calls coming in. We had liquidation of a lot of different commodities. And you also saw gold trade lower in effect with that market. Now, when quantitative easing began, you really saw the market react in a positive way, not only in the equities markets, but you also saw it in gold. So my sense is that if we're going to get some sort of protracted sell-off in the equities markets, which is certainly possible at this point, I don't want to get caught in the trap of where fundamentally we would look at gold to go up, but on a technical basis, it continues to trade under pressure. And it was for that reason that I really tightened our stop up this morning. Stop was hit at 48, but the way that I look at it is we had a good trade behind us. Our last trade, we picked up about $25. On this trade, we lost about $5 on the trade. And so I certainly did not want to give back what we've just gained in terms of our last trade. We'll go ahead and pull that chart up. So traders, this is the chart that I'm talking about. In fact, I sent this out last night, and during that time, it had not even come close to breaching this area. This is roughly 1152. The reason for my stop at 48 was that if it really crashed and began to sell off, I didn't want to be in the market if we had that proverbial selling the baby with the bathwater. I still believe that we've got pretty solid support here at around 52, and I certainly believe that they came and just ran stops, as you can see right in this area. So we did get stopped out with the small loss. I am reluctant to feel good about that, but I feel as though we've got to protect equity. That's the most important thing. We had a really good trade just middle of last week, and I certainly did not want to give up a lot of that equity. We made $25, gave up $5. Look for our next trade in the market. We'll have to see how the equities markets react over the next couple of days, because if we get a continuation in the sell-off, it certainly could put some pressure on the market. Now, in terms of selling pressure in the market, consider this. The market is down $6, but when we look at the U.S. dollar is down 1.7%, 93.39, coming off 161 points. And traders, that's where, when you look at the big picture, you can see that gold was actually under tremendous pressure. Now, yes, it's off only $6.30, but look at the big picture and what the big picture tells us, and let's go ahead and put up the gold index. And when we do that, you can really see the real picture behind this most recent move. In essence, gold sold off and sold off aggressively. Gold was off $25 today, over 2%, 2.15%. But once you add into the fact that a weakening U.S. dollar actually had gold gaining almost $19, in other words, $18.70, you can see that right here, then the net change, that's where we're getting our net change of $6.30 to the negative, when it should have been really a net change of $25 when you take out dollar weakness. So we could see some more weakness in the U.S. dollar. If we do, it's going to put pressure on the gold market. We're going to sit on the sidelines in terms of gold and silver. We'll take a look and see how they react in the next few days. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.